On this day, we'll explore the ticker analysis tool, which allows us to deeply analyze the historical performance of individual stocks. I was talking right now on the stuff that we are going to go through tomorrow. That is actually group of stocks. Like you search for certain criteria, and it pulls historical setups so you can analyze. But today's thing is gonna be the ticker analysis tool. That it's that like a statistical approach, but to one ticker. Like if you see something popping out on the scanner, this is what you are going to. This is what we do use the first as the first thing we look into on Flash Research. And why is this important? This tool has several practical applications that can improve your trading decision. One of them is adjusting risk based on probability, and the other one is for defining a plan. That's the like the most important two things that we look into when using this tool. Adjusting risk based on probability. By examining the probability of a stock closing red on a given day, you can adjust your risk per trade accordingly. For example, if a stock has 10 gaps in the past and 9 of them close red, the likelihood of it closing red again is high. Hello, Afghan. How you doing, man?
Hey, brother. Good, good, good. I'm doing good.
Glad to see you
Awesome
here.
work, brother. Thank
So,
you, thank you. Sorry, I just finished the meeting. I'm ready. I'm listening. It's
don't
beautiful.
worry, man. So I was telling when a stock on its history has a lot of gaps and a lot of those gaps close red on a day, you can say there's a higher probability of the gap that you are saying that day closing red. You might decide to increase your position size as well for this trade because you see there's more probability, there's more likelihood, because on other days you have seen such a price action, such a behavior. And conversely, if a stock has had 5 gaps but only 30% of them close red, you could take a more cautious approach and reduce your position size. That's something we actually do a lot. Like when we look for a stock on our ticker analysis tool and we see that um, the probability of it closing red is less, is lower, we then like maybe we don't short, or maybe we go with less size, and maybe we can get some like take some profits when we if we are systematic short sellers, for example, like we are. We will maybe take the trade, but we will cover when we have something on the table a lot, like we cover a bit, then we let the other part of the trade run. Like we take some cautious, and we are making some decisions based on this. And if the stock on the other hand has a lot of uh, gaps on the past that close red, we are going to increase our position size. We are going to not take profits maybe on the way, or take less profits on the way. Like, we are going to let it work because it proved on the past that it worked. Defining a game plan. By studying the average movement of a stock, you can anticipate how to execute your trade more effectively. For example, let's say if a stock typically spikes at 25% before fading, your game plan might involve waiting patiently for the spike before taking a position. That's another thing we do. Like I don't know if you know, guys, but I'm half systematic and half discretionary trader. I run actually two accounts on my own. One of them is like that discretionary, and the other is systematic. And on my discretionary approach, I used to take this insight a lot. I see, okay, this stock has a lot of gaps, and a lot of the time it gaps up, it spikes off of the open, let's say 25%. So I might be waiting for that, or I will be taking some cautions if I want to short it. That's something I have in mind. And when I see that happen and then it failing, I have more confidence when short selling if I see also the probability of it crossing red lower. Also, another interesting thing here that we don't highlight on the text, but we see here is something that I actually look a lot, and it's the average change from the average hot time, the average high of day time, and the average low of day time. This is so useful for me because if I want to short and if it's 10:40 o'clock, I like if it's 10 o'clock, sorry, if I want to short, I maybe am waiting a bit if I see that the average high of day time is 10:40. And also if I'm like making money on that trade and it's, for example, mm, 12, I might like wait a bit because the statistics tell me about it. So these kind of numbers are very important for me. The key benefit: by analyzing the past behavior of stocks, you can better predict their future behavior, giving you a clear edge in trade execution. This preparation helps you make data-driven decisions and trade with greater confidence. This is a game changer for me. Like since I started getting like paying attention to those kind of insights, my trading started skyrocketing. It started going well because I was paying attention to market generated information. I was paying attention to actual information and real life information, things that actually happen that we can track with our platform. So if you allow me, guys, I wanna go full in depth with the gap analysis tool actually on the page. Let me make it okay like this. This is the first thing we see is this when we open the tool. So let's say we search for the ticker VCYG, that is the ticker that squeezed today. And okay, this is maybe not the best example because this ticker squeezed today, but it's just real life scenario, so don't mind that. The first thing you see when you search a ticker is this window where it shows you the industry, the sector, the full-time employees, the location. If you click here, it will pop up the Google Maps and you will see the location on the map. Also, if you click to this window, you will kind of see the description of the company. You will see everything, like the first image that you want to know about the company. Then here you can tag actually this stock because you know there are a lot of times where stocks like this move in sectors. So if you identify a sector, you can tag it. For example, Trump, save changes. This is not Trump. Like, or I don't know if this was. There was a Trump related stock. I don't know if it was this. Okay, you can tag this and if you click here, you will see all the stocks that you have with this tag. So it's very useful on this kind of, of market environments. Moreover, then you see the chart. In this chart, actually, if you make it bigger, you will see the gap days here with the G of gap, and you'll see some data like visually. Also here you got the overview. UMAC, what the Trump stock of the day? Okay, yeah, you're right. UMAC. I was making a lot of money on that stock and it just went to the upside and I ended up closing it break even. But don't mind. This window right here at the right side of the page is all about statistics. You have three windows inside of it. First one is the overview, that it's like the most important stats on the gap day and the most important stats on the day two, and some values like the number of gaps, the average gap value, average volume, average pre-market volume, and all of this, as long as the average close red, like the not the probability, but the amount of times that the gaps on this stock closed on the red. In this case, you see it's at 71.43%, then, well, you can click average or median to see the data with, like, let's say there is a big squeezer on that data and you want to know what's the median, actually not the average, because the average is distortionated. So you switch to the median and see the data clearly. You go on gap day and you see this chart that is the average change from open, like the average price action. This is basically every chart of every gapper of this stock combined and with an average. Also, you can see the median. As you see here, the change is so aggressive. That means that there are some outliers on this statistic, on this stock. We are going to see it. And then you get a lot more stats than on the overview. You get everything you wanna know, like everything is here. And they also for the day 2 with everything you wanna know here, and also with the average and median possibility to change. If you go down, you will see two things. One thing is the financial data. As here you will see the market cap, the enterprise value, the shares outstanding, the float, the institutional ownership, the insider ownership, EBITDA, EPS, the balance sheet, cash flow, income statements. You can see also the SEC filings, pretty well organized here. You click here and you go to the actual SEC page, and you also can create notes here. Like you can see, like tricky price action B. You can save this note, and then in the future, when you are facing this stock again, because this is something that typically happens, you see tickers over and over again on different days, so you can save your notes and see them on any day, on any given day you trade it again. So it's great. Moreover, on the right side of this window below, you can see the gap day and day 2 gaps, actual gaps. For example, let's click here. It opens up the chart of that day, and you can see the price action, what it did. Let's say, for example, these 2 green days. Let's click on one. Okay, this day is a very outlier day. This day it's run and it has a big run. Also here, like you can be examining the examples and like take notes what this kind of what this stock does when it closes green, like today when we were at, for example, 11 a.m. we could say like safely that this stock was not gonna likely, like it was unlikely it to close on the red. So we could go here and see, okay, what did this stock do on the days that it closed green, and you see how the price action was those days. You can also select only the statistic, like to show close green or close red, and you will see that the average change from open chart or median change from open, whatever you decide to have, changes. So you can have a more like clear picture of those things that you want to know, that you want to see. So I think this is all. This is, for example, for us, well, for me, what I like to do is basically this. I see a ticker on the scanner. For example, let's say what kind of tickers today? For example, HWH. For example, I see HWH on the scanner. I search for it. In this case, I see it has 1 day that it did up tap. Okay, there's no more, not a lot of information because we don't see a lot of data. But BM array, for example, we click it. Okay, 3 examples, 3 gaps, and all the 3 were green. So this is telling me something. This is telling me that this stock doesn't like to fade. So when I see this, I am more cautious on my trading on that day on that ticker. I'm discretionary, maybe not going short, and if I'm data trading it, I'm maybe going short, but I'm maybe covering more like discretionary covers, or I don't know. I'm taking cautions. Um, so yeah, how do you think it is? Do you think it's helpful? Do you think it's a good tool to have? This, by the way, is the first thing I do whenever I check a stock on the scanner. The first thing I do is to search for it here, because here I have everything. And the most important thing, in my opinion, that it's statistical approach and statistical things. And there are stocks that actually um, have a lot of, not this one, a lot of data. So when a stock has, let's say, 10 gaps up, and you see the average or median behavior to be very similar, like you can you can take very significant conclusions. For example, let's say EFBD. I think EFBD had IFBD. No. Okay, I think I got one. Goals. For example, this one. You see, 10 examples, and out of 10 examples, out of 20 examples, sorry, because I had this on. Out of 20 examples, only 50% of the instance close red on the day. So you can see it's a terrible idea to short this. At least for me, like shorting this can be a bit tricky, a bit dangerous. So in my case, I like to take some cautions. As you see here, the average is a bit distorted from the outliers, but it doesn't change a lot, and the median showing a lot of reclaim misbehavior. So yeah, that's so cool, man. I love to use this kind of statistical approach. And also seeing this chart, it's like it draws me a picture of what is the stock doing, or what is the stock likely doing, and based on this, I kind of like manage my trade. Vitali, you are not watching the Champions League tonight. I love your commitment. Thank you, man. I'm not like a football guy. I don't like that much soccer. I prefer working. Thank you, man. Do you feel like there's any question? Do you feel like there's something that you might not know that you want to ask? Are there some questions? Nacho, which account of your performs better? Scalping, discrete account, or systematic? Well, like I cannot say, because I started my systematic trading approach this month. I started like 3 weeks ago, and it's going great. It's Since I started, I'm up like 12% on my account, something like that. It's a lot, but I cannot take good conclusions. But what I can do is to check on Fernando's, that it's my partner on Flash, that he has been doing systematic strategies for like 7 months or 8 months, something like that. I don't know, but kind of from there. And his results are far greater than mine. Like they are amazing. He has a lot of stability on his curve. But I'd say my systematic approach is I have a lot of profit factor there, so I don't know what to say. I think both are great. What is the difference between average and median? Well, this is an interesting question. The Basically the median. I don't know how to explain. Basically, the median has
Skip data.
the outliers, like the outliers distortionate the median. When you like the sorry, the average, the median is a metric that takes out those outliers from above and below, and it drives like it tells you what is the most like normal thing um, to happen. Do you have any way to explain it better than me, Masood?
Um, if yeah, I mean, you did a really good job at explaining it. My perspective on the difference is it's basically skewed data. So let's say if you have on average stock has gapped up 20 times and the average gap up was 40%. And then the one time it has gapped up 2000%. So let's say for simplicity it gapped up 10 times 40%. Every time it was 40%. So if we take the average of that, simply it's going to be 40%. But now the one time it gapped up 2000%, if you take average of that, so 10 times it gapped up 40% and one time it gapped up 2000%, you take that average there, then your average gap, if I had to guess, it might be 110%, 120%. So then you're anticipating that variable. So that the same thing goes for the high of the day, same thing goes for all of the variables. So when you look at that average, your data gets skewed. Fabri Cabro Corba, by the way, really good question. So the data gets skewed. So what the median tells you is the middle point. So you take number 1 and number 11, you take the median, the middle point, and you look at that number. So you sort them. Let's say if it was 30.9, 30.91, 30, gap was 39.2, 39.3, 39.4. You write them all down in that order and you take the median point. This way, you remove outliers into the aspect. From a gap point of view, it may not make a big difference, but from time of the day, the wash, the push, it makes a difference.
Exactly. Look, I searched for the actual definition, and the median is the middle value in a list of numbers ordered from small to largest, and the average is the mean in the sum of all values divided by the number of values. So, as Masood said, on the average you get like skews on outliers, and on the median you get not. So it's a better image of the statistics when there are outliers. Indeed. I hope you understood.
I want to add what I want to add one other variable for anybody that's new. A lot of times I have gotten a kickback or from people that are saying, "Hey, this ticker analysis is hindsight. It's bullshit." From the bottom of my heart, from my years of experience, I can genuinely tell you it's not. And for something not to be bullshit, we have to understand why it works. So somebody came to me, a successful trader. He runs a chat room and things like that. He's very well known, and he's like, "This is all hindsight. It's just a coincidence. This behavior doesn't mean anything." But if we could have a continuation from the last meeting that we had, and we talked about how there are funds that participate in these trades and in these plays, it's the same behavior. Human beings were creatures of habit. We gym at the same time, we eat and trade, wake up. A lot of our habits are the same. And the same thing goes for people, the same thing goes for algos. So the and if let's say you're running a hedge fund or you're running a prop firm or something like that, you will always want to have some people that specialize a specific sector. You're not gonna get a you're not gonna get a person that that does like a 20 billion market cap valuation to come execute, or vice versa. So even in that fine tune aspects, you would want to go detailed. All this gibberish jabberish, what I'm trying to say is, first, if we make an assumption that there's big funds that control the small cap, if that assumption holds true, somebody gets assigned certain segment. Somebody's like, "Hey, you know what? All of the sectors for oil, we're gonna assign it to Nacho. All of the biotech about this therapy or just the biotech sector, it's this person. You do the deals, you do the things, and you run it and all that jazz." And that's why when it's that person, their behavior because they're the market makers. They control majority of the flow, how it push. A lot of times people think as retail traders, we impact the price action. We barely make a freaking dent. In a whole bigger bigger scene, we're like 3% of the volume or lower. Most of it is institutions and algos. But in small cap and mid, the point of here, moral of the story, we can look at exactly the example that VCIG that we went today. Price action is always similar, and you'll be shocked, and you'll be like, "This is bullshit. This is not true." But it always ticker analysis is very powerful because it repeats the same time. Why does it happen at the same time? Because the market makers, the guys that are assigned the task, guys from like Armistice. If anybody listened to the previous ones or took notes yesterday's, I mentioned Armistice, Sabi Management. If you go to IDAI, it's a different story, but they always have warrants and they always exercise 4Y, 5X. So they had warrants on IDAI today, which didn't have an effect, and their cost basis was 32 cents, so they're going to push it higher and blah, blah, blah. But another example today, Nacho, if you can go to VCIG.
Yes, sir. VCIG.
And go to the time that it had a gap up and it closed green.
Okay. For example, this one. Or the other one. There are two.
The other one. So this is a bit being hindsight, but taking a look at it, a lot of the algos that are run, there's different components, but they revolve around either they're called TWAPs based on time or they're based on volume. So if you ballpark put your mouse over when the time of the fade is, as Nacho mentioned earlier, it's right around. Put your mouse over it. When was that, Nacho?
It was on
20... Where the high of the day was. Go.
Oh.
No, the time was it like 11:30, 11:05?
It was at 11:25.
11:25. So if we look at a similar thing, 11:25 to 12 o'clock was when today's VCIG's price action was where the top relatively was. So it basically went there and then it washed into VWAP, right? So if you can pull up the chart from today. So you guys can take a look at this. There's like, if you're using this tool, you will see there's many examples of so this statistical analysis that was a different day's date. It wasn't today. But can you add a VWAP to that, Nacho? This chart?
Well, the time is on my wait, let me change it for USA.
You can put Toronto.
Sorry?
The same. I was gonna say, I think Toronto's the same. I saw Toronto up there. No.
Years. Here it is. Yeah, 20.
Yeah.
Yeah, around that.
Yeah. So
2030, 2025.
it's
20.
it will never be perfect
Yeah.
to the T, but Nacho, add VWAP to it too. And you will see, guys, that the high of the day fade was relatively around the same time, and at the same time it did the same price action and it washed into VWAP. And you can make an argument that, oh, it's bogus locus luck, but there's like 10,000 examples of this situation. You guys can pull up your own chart. Basically, it will look exactly the same. Today's price action, it went to it held a bit higher, but at the end of the day, it went to VWAP. So that's when it went to VWAP. And is this a coincidence or what? No, it's just systematic. Whoever was running it, the price action behaviors, very often it's similar. So it's another neat little hack that you can use. And beyond using, understanding why it works is because the underwriters and usages are the same. Yeah, look, it washed and then got around the VWAP target. I don't know if that makes sense to you guys. Again, we're not here to lecture, so just ask us questions. Ask us what you, if anything is lurking on your mind, if there's any way that you can use it. If you have any doubts, questions, it's better to ask than hold it in because it helps. So, Unconviction asked the question, uh, historical gap days in the stock, you don't short. No, for
If you
Nacho,
have
Italy.
historical gaps on that stock, you don't should. It's not that simple. Like if I am trading on my systematic approach, if the data is telling me to short it, I will short it. But if I'm trading it on my discretionary trading, what I will do is to be more cautious. Like I will be waiting for more. If I have no other insights that made me have I'll like an image on my head, uh, I will be more cautious because I'm like exploring unknown territory. That's my take. Or if I see one gapper or zero gappers, that's my idea. Yeah, right. It's not that simple. I don't say okay. I don't short it. It's just all the pieces of the puzzle make me make me formulate a thesis. But I prefer it to have a lot of gaps and or more than three gaps on the history, so I can take more statistical basic based decisions.
I would be the same way. I have the same thought process. I think if there's no gap, I would just be more cautious, and it has to have a really good reason for it for me to be involved.
Okay,
Friedman will say
Friedman.
today's spike. It doesn't include today's data. It's yesterday's data
Yeah.
because we don't want it to be hindsight. Guys, keep your questions coming. The only way to learn is to ask questions. Will you be showing examples with different variables that will run through the backtest?
Look, and
Will you be
conviction.
showing what?
You, it's asking to you, but I will answer because I do something around this question, and I think it's interesting to, you to know on conviction. I actually, when I look at this, like I like more more than basing my short to this specific setup, I like to look for similar setups with the gap analysis tool. That is the one that we are going to talk tomorrow. And from there, if I have more examples, I can see that the time might be interesting to look for a strategy. That I build that strategy on the other tool that is the back testing. What is your take, Masood, on that?
I keep my stuff very simple, Reno. I like my life simple, my trading simple, so it's a variable. Will I short if something goes into a resistance? No. But will I wait until I see, I call it some sort of a structure, some sort of a risk that it's clear? Yeah. I pay attention to time, but then, price action is king above all. I much rather let other people guess the top and then I come. So if I see short, like if it's pushing and I'm like, hey, the chart looks very similar to this, it's pushing to this, and I look at the data and I find that, oh, 11 o'clock it tops out, 11:30. I may have taken the short, as you can see on the chart in 11. Go back to VCIG,
BCIG. This is BCIG. Okay,
the trader
this
view.
chart.
Yeah. So at 11, go to the left a bit. Where 11:30 is.
Yeah, let me take a look.
I'm usually on a 3 minute time frame.
Okay.
I'm usually on a 3 minute time frame. It's it's hard in hindsight. It can always be like, yeah, I would have shorted the 12, the top. Was there a chance that I would have taken it at 11:15, 11:30 in that price structure? If I was patient, not really, because it never made a lower low. But would I have been watching it around that time? If I was like, everything is like It's hindsight, but it's also not hindsight because you are paying attention to the variables. So I don't think so. The way I enter is if it's a failed breakout, failed push, or like a lower low. So at 11:30, where you see it goes up and it has a red candle rejection, there is a chance that I may have taken it on that rejection there where it had a doji candle above, like it cleared out the high. I would have stopped out, and then if it went back below 6, here, I'll tell you all of the mistakes I would have made or I may not have made. So I may have entered here. I'm taking a screenshot and I'll post in the chat.
Do you want to share your screen better?
No, it's okay.
Okay. But still on the general, like the chat of this call, but it's like a different chat.
Yeah.
Yeah, I know.
Yeah, the chat of this call, by the way. Interesting. So I think my first entry I might not have taken because it did not make a lower low, but I can't be a hindsight guru and say that there may have been not. But that first entry I may have taken, depending on a lot of variables. But then the second entry, where it made a lower low and then it pushed, I would have taken that, and the line is my risk. And you could see, so this is how I would have traded, and then my cup would have covered that view up. Long-winded answer, but I hope it's useful. So I let all the variables, either time of the day, resistance, anything, I let it play out and show me what it does, what it's gonna do. Okay, considering your hypothesis, short based on time. Okay. In future meetings, you're showing more examples with different variables that will run through backtest. And I think Nacho answered that, right?
Future meetings will
About variables?
Yeah, we will.
Yeah, okay. Yeah. Can't we code something that alerts us when trend line breaks? F1. These are trend lines honestly you think is a very easy task. But it is a bit of hindsight. Trend lines, because you could have had a trend line from way before. But it is doable, possible. We can make it so that if it breaks the trend line, it alerts. It's a very good thought process, and it is something we should include. Maybe make an alert or somehow. But overall, having worked with it in the past, like that trend line you drew is nice, but you could have had a trend line from the morning till then, and then that would have been broken. So you have to be very definitive and things like that. I think gap analysis tool is amazing. Do you have any tips to be used? I don't know, Shagrath, if you're asking me any tips. Nacho did an amazing job in covering it. I don't think I would. Everything he said exactly how I use it. I have a high conviction on it working. I try to make sure there's 6 gaps, but a lot of my trading it involves like 25-30% fundamental. Okay, I have some tips, but it could go into the complicated aspect. So I always like to understand why things work, and to some people it can drive them crazy. So why do these gaps work? Shagrath, it's for you. Why do these gap push 6 times and then fade? Like if you have a gap that pushed 6 times and then it faded 5 times, it is because it has dilution incorporated into it. Now, when something has dilution, then you know it's a gap and a dump and gap and dump. They need liquidity to dump it. And then there could be another gap up, and then all the bag holders that have been holding it, they'll finally be like, oh, thank God it came and it sold off. So one advanced feature on top of that, if you want to learn and enhance it, is don't go into the fundamental aspect hardcore, but pay attention to the variables, whether dilution is gone or not gone. So there could still be a scenario where something gaps up and it has no dilution, but it fades. But if you want to improve your performance by 15, 20%, you can be cognizant of if there if dilution is left, that's when people get shocked and they're like, "Oh my God, the stock faded six out of seven times. This one it didn't. Oh, it's an outlier." But then you look at the dilutions, and you could be like, "Hey, the dilutions and the stuff was all got dumped." So that's one variable that I could add. But you can go into a rabbit hole and go to a whole little thing and mess up your brain. So I wouldn't recommend it, but depends on your trading experience. It's definitely something you can always improve upon. Thank you. Trend lines need to be done via the angle from morning. It's too shallow once it's parabolic. Uh, yeah, yeah. I mean, it's definitely something to F1 team boss. Trend lines are definitely something very useful and beneficial that could be worked upon and needs to be worked upon for sure. I'm just letting you know. I don't like to. My word to me means a lot. So I don't like to half-ass and lie and say things that hey, it's gonna get done. I know from experience having worked with a lot of coders, developers, it's harder than it is. We use the zigzag model, but for sure we'll look into it. Worst case scenario, we can have a trend line. When the data becomes live, etc., you can have a trend line, and then when the trend line breaks, you get an alert, something like that. Or automated AI trend lines. I know what you're talking about. You could get an AI to draw the trend lines for you, for sure. Yeah, of course. Yeah, of course. How do you analyze stocks like TCNR that fades mostly in pre-market with a tool?
You can look at it like from a manual perspective. Like if you, for example, CT and R, see, okay, we see there are 7 gaps. For example, there's another thing we can do that actually I didn't tell before. And if we go to this window here, you can actually like ask it to tell you guys gaps about from 5%, not 20%, and maybe with 500k of volume. Um, so if we search for this, okay, there are more gaps. Look, there are 18 gaps now. Um, Also, by the way, you can select all of these like features and columns to show up here. But going for it, you can then check it out like this, and you can be saying the pre-market. Like, is this something that I actually also do? I like to, when I see something, some opportunity going on pre-market or so, I like to come here and see what it typically does on pre-market. I look it like manually, but I also can do here. I can see this chart over here, and I can see um, the average movement of it on the pre-market. But I prefer to look gap by gap and see the pre-market. For example, let's say another thing I like to do is to order by volume or perhaps pre-market volume. Let's add this here. Uh, Okay, so here we'll see the stocks that had a lot of pre-market volume. For example, the gap, sorry. I'm on BCIG, sorry. You see, okay, I didn't, you say
TCNR, I think is OTC.
TCNR, okay, I forgot the M, sorry. TCNR, no, there is not a stock
No,
called
because it's I think it's OTC.
TCNR.
Is the spelling correct? Just
No, there's a mistake on your message, I guess, like on the ticker. Well, whatever, but the the answer to that question is gonna be this that I was talking about. Like I like to go through every gap and see the pre-market action, and if there are not too many gaps, I like to touch these filters to show more, and to see if there's something actually like I will see there something like that gap up at 5%, but on the pre-market run 100%. I don't know. So yeah, the spelling is bad. I hope this answered your question by the way.
Hey, David Estebin, Gulimor, Infinal Trading, Naito, Friedman, Renault, Temgon, Tom, Torres. If you guys have questions, don't hesitate to ask.
It was great.
We're not in the general. We are on. I'll post if you're watching general and you don't know where we're talking, I will send you a screenshot here where to click. Let's see if anybody's talking in general. Just joined. So if you're watching general, you click at the circle, and that will bring you to the chat where we're chatting. Yeah, thanks. That was
I had a
correct.
hard time finding this out the first time I wanted to. It's
Yeah,
hidden.
same. It's a useful tool to have a chat so it doesn't spam the general, but it's tougher to find. They need to maybe make it bigger
Yeah.
so it's more interactive. Will it be possible to load my charts I've traded to perfection and then have it AI align those charts, even losing trades when I cut loss perfectly, to analyze market trends and those patterns? F1 team, I haven't, even within the team, I haven't brought it up, but that is one of the things long term we're gonna discuss internally as a team. I think AI is very powerful, and I have like 4 methods we could use, but we don't want to jump ahead of ourselves. But yeah, I've experimented with AI because in our thing we have a performance coach, and we go over variables, and we can let AI pick what are the common mistakes that it's making, what's the common mistake that it's not making, and even look at pattern behavior. You give it a screenshot and it looks at all the charts and gives info. It's very cool. You can stay with us, give us feedback constantly. Right now, we're fully focused on our our alerts and scanner. We want to be super focused on it and not get distracted. After scanner alerts, I would like for us to focus on variables, and then it's a constant. It's a research in motion. Basically, we're always gonna grow, always gonna incorporate, analyze, put things in. So, yes. Can I help test it? Well, without AI profile researchers will be a thing of the past. Can I help test it? Yeah. When the time comes, you can be part of the beta testers when we get to that. You just have to be active and value add to other people's life. And if we see, we're very chill. If we see that you're value adding to the team, I don't see why not. Because it's a win for us. It's a win for you. You'll make the product better and shape it how you want.
Flash research is an alive product. It's always evolving, always evolving. Like every month or every 2 months, we make sure to take something out, like something new, and we mainly do it for us. Like we say, okay, we are missing something. We work to do it, and okay, boom, on Flash, and there people can use it too. Like, it's so cool because we are like fully alienated with your interests and ours. So the tool keeps evolving, keeps getting better and over time, and you guys keep giving us feedback because we are not the smartest people on earth. So when you guys give us feedback, we know that, and we have a big list of a lot of ideas that we are constantly using and constantly adding to our existing platform. So when you buy Flash Research, you are buying a product that it's not static. It's a product that it's always evolving and always getting better.
Uh, Nacho, he was asking TRNR. He said he got his tickers mixed up.
Okay, I was talking about the other thing that he was telling, like AI and stuff, like TRNR. Okay. Let me check. TRNR. Yeah, I think I tried this one.
Juice, the way I would trade it is just find a stock that's similar to that.
This one. Okay, let me check all the gaps. Let's see. Put here 5%. 15 gaps. And the pre-market volume. Let's say. Look at this one. Oh, beautiful fade on pre-market. Another one. Beautiful fade. Another one. Another fade. Look, you are like seeing on a very like in less than 20 seconds I covered 4 charts and I saw it fade on pre-market. So that's a key aspect, a key point that I take out in a very fast way. That's something. Look, another fade. That's something. It's so useful. I cannot emphasize enough the utility and the beauty of looking at this information that quick. Before I had Flash, I had to do it in a very complex way, and I almost had no like all the time I had no time to check it out because the action was going on now, and I needed something fast to check it out, and this was the way I found. You're the man.
I
You're
would
the man.
find one.
Sorry.
Uh, Juiced, I would find a tick. I would. Nacho, can you put it back to 20%?
Yeah.
The default. What I would do is I would see today's price action in pre-market juiced, and then I would try to compare it to what the current is. So I think this one from today's price action, this looks very close. So this is reverse split adjusted. So go to the highs, Nacho, 44, right? The high. So it faded from 4 to 3. So it has a similar percent fade. So it
This
went from
basically the same chart,
wait,
actually. Look.
yeah, it's the same chart. And Juiced, how do we know that it's similar? Try to use a variable of a percent fade from the open. So the rest of the stuff could be hindsight, but the price action replication is not hindsight. So if you took at 9 a.m., if you were awake and you pulled up TRNR and you look at what does the price action look like, look at all the gappers, click through all of them, and you will see this one is the closest. And then I would use a risk either, depending on wherever you enter, you could risk off the VWAP at the start, and then as it works, you can tighten it, risk high of the day, use that as a variable, and then it basically matches. I would give more emphasis on that because I think the way I read your question was how do I trade these things that fade pre-market high quite a bit. Let us know if that answers your question.
Yes, I do view for this risk on this swing, man.
And then as it works and it breaks the lows, you can always add another tier and risk off of the high once you feel like, hey, this is completely dead. And on average, it has a high fade rate and blah, blah, blah. If it breaks the lows, there's different styles of doing it, but if something has a high fade, if this was like 8 samples and it had an 80% fade, I would want to make sure that if I can, try to put a bit more risk on it, but only through proper setup, not just random spots. Like once you feel like the high of the day is set in, based off the distance from that and a high fade probability, put another 1 hour risk. Not sure. It's getting pretty late for you, huh?
Yeah, it's fun. I love to do this kind of stuff.
Okay, good.
Thank you as one team boss.
I appreciate that. Thanks, guys. That was pretty helpful. 75% gappers are closed right if there is an edge. If 75% gappers close red if there's an edge, I may look at all the stocks that close red until I find that it doesn't come criteria. On conviction, I personally do that on ticker analysis. Like if you're using gap analysis and you have like 100 samples, I have not done that because I don't want to go through 100 charts, and also I don't know if the correlation coefficient would be strong. Correlation coefficient means like I don't know if the behavior will, if it will fade as it had faded before. So I don't do that. And if you're asking me, I don't know if Nacho does that.
Well, I like to, like when I'm trading something, I like to see the instances when the price traded similar to see what it did. Like I am constantly looking at tick analysis tool throughout the day. Right, when the chart is forming, I like to go back and see and review like what is that stock doing actually on that day that it traded the same. What did, sorry. Yeah, that helps me formulate an image. It's pretty subjective though, like it depends on your experience, it depends on the things you're looking at. But yeah, definitely for me it's something that I take value on. Do you try pre-market when your ticker matches the historical gap behavior? Well, if I see, I don't have fixed rules on this, but if I see something like the case that Juist told before that it was TC, sorry, how was the ticker? TRNR. Like I see that, and I see a lot of faders. Maybe I see it on pre-market, and maybe I'm not buying it. Maybe if I'm looking to long it, and I see that historical behavior, maybe I'm saying, okay, I will go more chill. I will go with less size, or I will look for more confirmation or more volume. You know, because on the past it showed up that it tends to fade on pre-market.
I'm not very good at pre-market, and also I try and avoid pre-market because there's not enough liquidity, and as at a certain stage you have to kick out things for sake of mental capital to so you perform better during the day. So I try my best not to take pre-market trades. But sometimes once in a blue moon, if I think a squeezer's on, I don't mind getting on, but that's like for a multi-day hold. IDIA was a good example yesterday. So if you look at day 2 of that chart, that in conjunction with market, ticker analysis, a bunch of variables, there's a possibility it was going to squeeze into day 2. So I took that after hours yesterday, post-market. I will want to know which are criteria.
Vital, for the gap tool, I will want to know which are the criteria on hindsight to find this dog that faced 30% in the past, if it's possible. Look, I will let that to tomorrow, okay? Tomorrow we are going to go deep about those kind of searches. We are going to make a lot of searches together and see and seek for edge all together, and we will like reveal every aspect of the tool. So if you don't mind, wait for tomorrow, and we are going to do that tomorrow, okay? And what do you think of the setups for a gap on the second day? What do you think of these setups for a gap in second day? Well, it depends. Like whenever I see an opportunity to trade on a day two, I also like to come here and see the day two statistics. For this case, look at the median. For this case, it's a bit choppy, but maybe it's giving me what I want to see. Maybe I'm trading with overhead and it went down on after hours and then spike, and I want a short to get this kind of moves. So maybe I'm seeing this and saying, okay, it doesn't close red, but it's giving me the price action that I want to take. I like to look at those values. I want to trade gappers, but I always get squeezed. It's part of the game. Like they are always are going to be squeezers. You can learn also to go long. Almost a long indicator when I'm a short seller. Well, today for me was tough, and yesterday was tough too. Today I was up like 1.2k, and I ended up losing $300 on my systematic account because of this. A lot of faders that then became reclaimers. But it's okay, man. It's part of the journey. It's part of the game. It happens, and you have to like the most important thing you have to take in mind is the risk management. The risk management always have to go first. Always, always, always. When you have great risk management, find an edge, you will kill it. Any more questions, guys? If you don't have any more questions, we will be closing out. Let's see if someone has another. Feel free to also open the mic or the microphone if you want. If not, you can write it on the chat. Thank you, guys. A lot of body. I missed some things, but I could love to see the recording later. Okay, Paul, contact me for that. Okay. Thank you for coming, man. So, okay, people, we are coming to the end of the day today. Thank you all for coming. It was amazing. Like every day we do this. Tomorrow, remember, we are not trading because they are Thanksgiving, but we will be hosting another live webinar like this, talking about the gap analysis tool, and we are going to go deeply with it because this has a lot of stuff to do. Like this is going to be interesting. So, guys, same time. They will always be at the same time. Tomorrow's and Fridays is gonna be at the same time too. Fridays with the background. Okay. So thank you
Guys,
really much, guys, and thank you for your time.
before before we go, I hate to be salesy. I'm not trying to be, and I do my best not to be. But the promotion code is still available, and I think it's for a very limited time. 50% off all of the annual. If you want to take a look, go to the website. It's Flash Friday something 50.
Yeah, Flash Friday 50
Yeah,
is the code.
yeah. And meanwhile, use the long holiday to go and the longer hold ADF if it's a strategy. Like basically mingle there, post your thesis, post your strategies, so that you can find other people. Try to use the time off as a way to learn and grow. Thank you guys. I appreciate you guys. I hope it was value add. And we're always a message away if you guys need anything.
Yeah, thank you, guys. Thank you a lot I really appreciate it. I really enjoy doing this kind of stuff. So thank you again, and see you tomorrow. Okay. Bye bye, guys.
See you guys. Bye bye. Take care.
Take care.